Hello, good day, good morning. Real-time daily trader ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side, live and directly answered in our webinar. Our goal is quick and smart, so let's have a nice and quick start like every day. Also today, it's Friday, the 8th of June, 2018. We will start like every day with our disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down and displayed there. This is me. I'm the German guy from Admiral Markets. We are a big international Forex and CFD broker, over 18 country offices. So I'm the German guy, the Berlin guy. My English is made in Germany, but maybe some of my quality too. But I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. And like today, on Friday, it's Dirk's Day. Every day to the same time, our leading day traders live. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30 CFD, triple spread of just 0.8 points to the main trading hours. And if you check out our euro-dollar spread, also here you will find typically spread of right now 0.8 points only, all without any additional commission. Check all that out on admiralmarkets.com. There you will find also how to contact us. You can call us, you can send us an email, or visit the other channels like YouTube or Facebook. Everything is linked from admiralmarkets.com. And on admiralmarkets.com, you will find also something about our regulatory background. Admiral Markets UK Ltd is authorized and regulated by the Financial Conduct Authority. Enough from my side. Now it's time for our leading day trader of today. This is Dirk. Hi, good morning, good day, Dirk. What's your view to the markets today?
Good morning, Jens. Just still waiting for that screen showing up. Okay. Just to transmit my screen. I hope the sound is clear and the picture is already there. So we will start with a typical sentence we may hear from the space. Usually they say, Houston, we have a problem. This morning we probably could say, Frankfurt, we have a problem. The DAX is tanking just for the reason of those upcoming trade war stuff. And around the night and already at the morning, a couple of guys spoke about those trade conflicts, trade war stuff, just because of Mr. Trump is about to change the way the world was trading, to change the way the world will be trading. So a lot of guys are already looking at the meeting, at the G7 meeting, which will be taking place in Canada. So most important thing for the German DAX, or as I already said that last Friday, you already see the blue trading box right here. We tested that one a couple of times right now, and it is still the same trading box, still the same level. You see the 61.8 level, which is around those 12,620s. And as you see that morning, for example, here at the terminal, this trade has been activated at 12,636.65 and is already at the same level with stop loss. So I moved the stop loss to the entry. Might be crashing soon. So what? No problem. We'll be loading up a next DAX long scenario if we just tank a little bit of 20 to 50 points again. If we see a so-called choo-choo train down to the road to 12,450s, that might be another way to, just to collect or just to try a rebound trade. Otherwise, you stay. If you already short, you stay short. Over the weekend, I would not hold to any positions. So you might think about closing positions until until the weekend is about to come. Okay, before we go into details, just a little bit of a sum up on what we already have been speaking about last week. So all these kind of things, I don't want anybody to cheer about what I precisely said. But in fact, the trading box at the Eurobond future here around this 160.30s, where we said that might be a rebound scenario, already is taking place. Week is still in place. Of course, because we hold it that long, we are collecting negative swap. This is important to say. but in case it is really rocking up to the 1330s level, that might be okay, and that might be tolerable. So the other one was the Euro-US dollar. We spoke about those levels at 118.57 here, the 161.8 level, where we said that it might be very close to a nice way to the short side again. This one worked out as well. As you may read that at my Twitter account, you already saw that I called out a trade with a Euro-US dollar short at 118.20. This one is still running, and the stop loss will be moved to the entry zone right in the next minutes after this webinar. The gold trade, I already spoke about that one. The other one we spoke about was the Euro GBP. Even that one was quite clear. We tested, as you see, that daily candle. We tested the 61.8 level around this 08830s, 08835ers, and went back down again. The reason about this short needle here was a couple of rumors and a couple of talks about some politicians who said that that Great Britain will definitely exit the European Union customs union after the Brexit. So this is something a 100% turnaround again. So this brought a couple of hours of confusion and a weaker pound these hours. But that turned around after the end. Until the end of the day, we already have been down there 30 to 50 pips again. So that is the situation right now. If you look about into the next days to come, the next week will be loaded, really loaded with almost everything which is related to every kind of market, like the Euro-US dollar, like every kind of currency trading stuff, and even the equity markets. And we are speaking about two major central banks coming up in the next week. First of all, we've got the so-called Federal Reserve. So the US central bank is about to decide about the next hiking process. And if you got to watch, for example, take your which kind of explorer you need or you use, if you just use Google Chrome, or if you just take Google and just type in FOMC watch tool, and you will find the countdown to the so-called FOMC, which is showing you a probability of how much they will hike, or how probable is they will hike, and the percentages, they are quite clear. So 91.3% right now, this market is pricing in a Fed rate hike. So the next target rate is around 1.75 to 2%. So this one is going up. The Fed rate is going up. What does it mean for the rest of the markets? First of all, it could mean the dollar will be getting stronger. Secondly, there's the big question, which I will pose to you again, like I did that a couple of weeks ago or last week as well. The more rates are rising, the more questionable it is to be invested in equity markets. So where's the reason to push your money into, for example, equity markets or into stocks, if you are really sure that you will get a year return, for example, for 10-year US Treasuries around 3%, 3.5% very soon, or in other kind of papers where you get a target rate between 2.5% and 3%. At the other side, you may have the risk at the equity markets that a lot of those stocks will plunge, and you will be having a really bad entry level, and you will be dragged down to the water. Okay. First of all, very important to say, between those two central bank meetings, Euro-US dollar will be volatile, of course. The next one is the ECB on Thursday, and this is the only hope. We got something like a little bit of hope for a Euro-US dollar, a little bit for the upside, still for the upside, just because of the reason the ECB spoke about the ending of the quantitative easing program. So this is the really a little bit of a hope. Okay. Signals, or let's say trade setups for Euro-US dollar. If those setups are not activated at your platforms, if you haven't done anything yet, it is probably quite interesting to stay at the sideline until the market is reaching. We'll go to the 1 hour chart until the market is reaching the 118 level again, probably just to having something like a relief rally or something like a short rebound to the upside, but definitely to the longer run, it should be going down to the 117.50s and 116.80s again. We will see that 61.8 level here at 116.42 around that. So probably 116.40s would be correct to say that, which will be the target zone to the downside. So just use that Fibonacci tool, so-called, as a marker to give you some hints where your targets might be lying around. Okay, back to the DAX. This one is not stopped out yet. We are collecting. If you are able to do that with a couple of lots, like this one is just one lot size. It was one lot. 1.00, as you can see it here on the terminal. The most perfect situation is if you open that one with 2 or 3 lots, for example, and just slightly go out of the trade and so-called, or even fade the trade if you like that. But the most important thing is just go out of the trade with 1 lot or with 2 lots and leave one in place, just to be sure that you might have a little bit of a party more up to the road. Okay. Where are the targets? Where are some kind of rebound targets? We go into details in the 4 hour chart. Just might be closing that one just because of space.
So like in any webinar, all the live participants are able to ask questions or giving feedback. One question from a participant, EURUSD 30 entry, no stop loss and no take profit, why?
Stop loss, the stop loss in there. The stop loss is in there.
Okay.
You see the stop loss is at the entry.
Just what the participants' feedback, so maybe they didn't saw it. So, but of course, it's always a good idea to make a stop loss and take profit. And yeah, do you have also a target to take profit? Maybe.
Yeah, that's what I wanted to talk about right now.
Great. Thank you.
Okay, the DAX trading, just because of those, like you say, the take profit zones, where could this trade be running to, is the question about, for example, daily pivots. If you use that, you may go to your navigator and just place them into, just put them into your screen, into your platform. It's not very difficult to do that, and you see those lines here. For example, you see that resistance 1 line, which is at 12.878, which might be a little bit too much. And you see a so-called pivot point, which is around the 12.770s, which might be something like a rebound or a try to this rebound stuff right here. Right now, very important to say, besides all this DAX, concentrating on the DAX, you badly need to concentrate on the US markets, and they are down right now. So if you look at Dow Jones, Nasdaq 100 and S&P 500 futures, they are down. And if you look at those levels, they are not even down a couple of points, they are down a couple of percentages. For example, the Nasdaq future is dragging down more, and the Dow Jones is getting closer to 25/100s. So if that stays, if that remains until the first hour before the opening of the US markets, there won't be any help for the DAX. So it should be something like to think about closing that trade if it is still active, and if there is still a couple of points to grab. In fact, this one could be the take profit zone. As you see that one, I just will use that as a line here and place it around that pivot point. So the 12.770s, it could be a level to reach or even close to touch. So that might be something like this level. You also, on top of that, can use the take profit and place it directly into the mask, the old school way, for example, this one here, 12.770s. What is modified right now, and you can see the take profit in the platform. So fully automated, you don't have to do anything. The trade is running out. If it goes down to the stop loss level, there won't be any loss with this one right here. If it stays up, and if it really goes up the road, of course it will be grabbed out at 12.770. even if the market is skyrocketing to 12,900 or whatever, so just for any reason, whatever the reason might be. Okay, another one, because we are running out of time, and Jens will be beating me if I overdo. Let's have a look at the next market, which is really interesting, single stock. I don't do that rarely, but there's one single stock in Germany right now which is very, very interesting, and a couple of months and even especially the last weeks beaten down the road. It's the share of Deutsche Bank. Deutsche Bank is, yeah, a lot of people are talking about Deutsche Bank like it will be beaten down the road furthermore and will be killed. But be sure, if this is really about to happen, you have something like 2 or 3 Italys in the market out there, because the Deutsche Bank has so much exposure and derivatives exposure, it will kill the market, and it will have something like the same stuff like Italy, the same thematic. It's too big to fail. So there might be another solution for that bank. Whatever. Yesterday, a couple of headlines running around that the Commerzbank and the German bank might be going together, might be having thoughts about having a merger. I'm not sure if that works out. If you just pull 2 bottles of really bad wine together, it still stays a bad wine. So I'm not sure if that helps, but anyway, they might be getting bigger, of course, and more important. And later on, the tail risk, the risk is even getting worse. So I'm not sure about this tactics, but we will see what will be happening. We got a couple of RSI levels here. The last month, February, you saw that one really down, sub the 20 line. We'll close that one here just to have more space. And already you saw that 18 level relative strength index just a couple of days ago. And even this kind of a headline or this news line from yesterday with Commerzbank and German and Deutsche Bank merger, it didn't help very long. Just for a couple of minutes, or let's say a couple of 1 or 2 hours, the stock spiked a little bit, a really little bit intraday spike, and later when this one has been sold again. So what is the kind of interesting level where there is something like a, let's say a rebound scenario? You might start having this line here and just combining that one. We'll just do that to the 1 hour chart. Let's say if it's perfect to see that. 4 hour is better. And just to be sure that we will have something like a little bit of a bigger screen. Let's see if that works out with that one. Yeah. So that might be better. I'm just deleting that indicator here as well. So what is the possible next target to the downside? You got a 261.8 level. Let's check if this one here is correct. Looks like this one might be the better one. Yep. And you have the so-called 261.8 projection to the downside, which is still a level where the stock could be running to, or very close to that. I will do that with a trading box as well. And so you might be having something like a little bit of a picture where that rebound scenario could take place, or if we really get down there. The other version is just to build up 2 positions, so-called two position strategy. So then you start with a half of a lot, for example, or with the typical way of 100 stocks and going up with the next buy at the level which is just a little bit cheaper. Don't do that more, just 2 steps, that's it. And just to average it more to the downside, and later on place your stop loss. Definitely a stop loss just a little bit underneath that 261.8 level. That's just one something about giving you a hint how to do that, because it could be getting very roughly. And I expect something like a short squeeze in that stock. Not the next days, not today, not whatever. You might be getting that in a couple of hours. You might be getting that in a couple of days or in 1 or 2 weeks. But there will be a big short squeeze in that stock, because a couple of big boys are short that Deutsche Bank share, and they might be getting squeezed out, or the market or the participants try to squeeze them out. So that might be having an effect on the upside targets, and those upside targets will be having at the 61.8 level, just a rebound, the first rebound contact very close to the 10 bucks level, and then the next one will be the 138.2 level at 10.30. So that's exactly, you don't see it on the chart at the chart right here. If you look at the Xetra DAX, at the Xetra Deutsche Bank share, there's a little gap between those 10.20s and 10.30s. So this is another reason why it might go in this direction to 10.30 just to close the gap. It's not a 100% game. It's nothing like Merlin's vicious circle here, and giving you a hint that it will be happening. But it's just from the theory, from the trade history, that gaps are getting closed. It's a little bit of a percentage, more something like history, and more something like trade history and experience than anything else. Okay. So a couple of trades, a couple of scenarios have been talked. If you have any questions, go on. If you have something like a market you wish for, just tell me that one.
Gold is an interest market from some participants. So let's take also a look to gold.
Right, gold. Already took this one last week and placed that that order. We'll be opening the terminal again just to make it more visible for you guys. So you see that one is been opened at 12.98.59. The stop loss is at 12.88. It's been moved to 12.88.59. So the more it's getting stable right now, and the more with maybe all the noise about the global trade war, conflict stuff, and geopolitical tensions. Remember, there's another big meeting next week. Kim Jong-un and Trump are about to meet in Singapore. So you never know what will be happening in the next days into the next week. So it might be not all too bad to be positioned with a long in gold, just for a reason that this will benefit from this kind of moves or critical geopolitical tensions. So the thing about this gold stuff here is that we have a look at the longer term level. On the daily chart, you see that trading box up here from the short scenarios, and you see that, no, you don't see a trading box, you will be seeing it very, very soon. You see that levels right here, which is the old stop loss level. All those levels here combined with Fibonacci tools, Fibonacci research. So the upside is the 1,366 level, and the downside here is the 1,282 level. So those two levels combined give you the so-called Fibonacci retracements. The target of that position, as you can always also see that one via the German platform guidance where I put in this gold trade. The target is a little bit more up to the 61.8 level, which is around 1334 here. And a couple of the first rebound scenarios, and maybe that one is taking place around this 38.2 level at 1314. This could be, something like a level where you could place the stop loss to the entry, or where you could take half of the position off and just ride it up to the next target, which is the 61.8 level. So this is the thing about gold. The worst thing about gold is we had this geopolitical tensions a couple of months right now. The worst thing about gold is we are about to have those Fed decision next week, and a target rate will be hiked to 1.75 to 2%. So this is something like which is negative for gold. You got to know that. You got to be sure that something is really badly happening to gold at Wednesday at 20 CET. Because when the Federal Reserve decides and they will hike, I don't expect gold to rush up and to rock up. Probably we will have something like taking a D ... to the downside again. So this is the thing about gold. And just one thing, I forgot to talk about one special market. No. I think I'm pretty much done today, and I'm really quick today, I guess.
Yeah, that is our goal. Quick, smart, and short. But for that daily, tomorrow is another day. But tomorrow it's weekend, it's Saturday. So I wish you a great weekend. The next business day will be on Monday, and on Monday it's Jay's day. Jay usually focuses to the institutional Forex view. So if you like to see it, join us Monday to the same time. And if you'd like to see this video again or this webinar again, a couple of hours later, it will be available in our YouTube channel. So check it out also if you like to do so. All the time, great trades. Greetings from Berlin office, and the last words from Dirk.
Yeah, for example, what Jens just said a couple of seconds ago. First of all, good trades, really good trades. Stay safe. And secondly, of course, enjoy the perfect weather. I don't know where you guys are all around, but right now here it is so sunny. You might be closing your platform in the afternoon, in the early afternoon, after you maybe see that the US markets are not rocking up again. So that might be a reason maybe to just have a break a couple of hours earlier. You never know. Sometimes you will be catching a good position when others stay to the sidelines. So have a really, really good weekend. Enjoy. Go long some beers maybe. And we will be hearing us at Friday, the same time here, 11 CT. Thank you. Bye-bye.